Hi everyone, welcome back to the channel. If you're new here, my name is Bryan Carreto and I'm a CPA that is here to simplify all things accounting related. Today we're diving into a fundamental yet crucial topic: how to audit and analyze a trial balance. Whether you're a small business owner, a bookkeeper, accountant, or aspiring auditor, this is a skill you need to build. Before we jump into the steps, let's first talk about what a trial balance is and why it's important in the audit and accounting process. A trial balance is a report that lists all of the accounts in a company's general ledger, along with their ending balances. These balances are categorized as either debits or credits, and the total debits should equal the total credits. Hopefully. This report serves as a foundation for preparing financial statements and ensures that the accounting entries are mathematically correct. Why is a trial balance so important? Because it acts as a checkpoint. It helps identify errors in the ledger, it provides a snapshot of the company's financial position, and it is a starting point for audits and financial analysis. Now that we understand its significance, let's dive into how to audit and analyze a trial balance. In this video, I will cover how to prepare the audit work paper, review account numbers and descriptions on the trial balance, identify the normal balance of each account, and ensure that the trial balance nets to zero. Analyze each type of account, determine the proper mapping of each account, and determine if we actually need to test the account balance. So, grab your coffee, download this trial balance, and let's get started. The first step in auditing a trial balance is to prepare your audit work paper. The documentation in an audit work paper should serve as a roadmap to re-perform what you did. Keyword, re-perform. Remember, in audit documentation, if you didn't document it, it didn't happen. Here's a quick checklist to make sure that your audit documentation is sufficient. A clear header with the client name, period end date, and document title. Your purpose of the work paper, each procedure you perform, proper labeling of columns for account numbers, descriptions, and balances, and tick marks to document specific items in the work paper. Lastly, conclusion reached based on the testing performed. Always remember that audit documentation should provide a clear record of the work that was performed and allow for re-performance by another experienced auditor. Organizing your work paper and making sure it's as aesthetic as possible makes sure you have an organized approach. And this also makes it easier to reference during the audit process. All right, guys, welcome back. So now we're actually gonna get to the actual testing of this work paper. And remember, the first thing we're gonna do is gonna prepare the audit work paper. So we're gonna add, the first thing, like I said, we're gonna add a clear header with the client name, the period end date, and the document title to this. So then let's go ahead and do that. So what we're gonna do is our company is gonna be called CPA Swag. So we're gonna be CPA Swag LLC. And then what is the second thing we're gonna do? So always try to label the first thing with CPA Swag or the company name at the top left-hand corner. Again, you want a clear header with the client name, a period end date. So then before we even do the period end date, we'll do a document title. We need to title this work paper just to let someone know, hey, this is the work that we're gonna be doing on this work paper. So we're gonna literally call this a trial balance. That's it. And what's the period end date? This is gonna be for the period that just happened. So we're gonna call it, like putting it approximately 12/31/2024, and that's it. That's all we need to do. That's how we're gonna start our audit work paper. At the end of the day, I have a completed version here, which I kind of want, at the end of the day, I want it to look like this. But before we get there, we're gonna go step by step on what we first need to do. So again, we're gonna prepare our audit work paper to make it look like an audit work paper and to make it look aesthetic, because a lot of the times, believe me when I tell you, there's gonna be so many times where you don't receive something very nice from your client. So the first step you wanna do, make it look like an audit work paper. Give it, again, client name, period end date, and the document title. All right, the next thing we're gonna do is we are going to add a PBC on it, which when you're auditing, the best thing to do, this means provided by client. You're essentially telling someone, hey, this document that I'm working on in here, it was provided by my client. And again, this trial balance here was provided by our client. So we're gonna add a PBC on there. We're gonna go ahead and add also the ML. Your ML is materiality, your performance materiality. And usually I like adding this because depending on what firm you're at or where you're working at, you're always gonna, in every audit, you're gonna have what's called materiality, which is gonna be pretty much you determine what's important and what's not. What can you live with not testing, and what do you have to test? What is considered an error, and how large of an error can you live with before your financial statements are materially misstated? So you have ML, your performance materiality, which is gonna drive a lot of your samples during testing, which again, we're just gonna document this here because we just want this to look like an audit work paper. And all I'm doing here is I'm doing Control X, Control V. So I'm cutting copy. That's all I'm doing. Okay, so we're gonna add ML, PM, and then we're gonna do 5% of your ML. So that's essentially 5% of ML. Again, this is gonna be all during the audit process. You're gonna be able to figure this out, especially during planning. You'll probably come up with, you will come up with materiality, performance materiality, and your 5% of ML, which is essentially, again, what you consider trivial, what's not. Okay, and ML, again, we're gonna calculate it for the purpose of this work paper, but again, typically during planning, this is calculated. So ML, we're gonna say it's, we're gonna say it's 10% times 10% of revenue. So 10% of revenue is what we consider material. So 650,000 is what we're gonna consider material for the purpose of this audit work paper. PM, we're gonna say it's, let's say 80%. Again, these numbers should be driven by whatever firm you're at, whatever methodology you're using. This should be given to you as far as how you determine your materiality. And then 5% of ML is literally just gonna be 5% of that. So we're gonna calculate that. And how I'm doing this, I'm holding Shift down arrow to highlight all of them. It's easier. I'll create whole other videos on like Excel for accountants, but the more you get comfortable with doing this, the faster and more efficient you're gonna become. So I just hit down Shift, down arrow, Alt HK, Alt H9, Alt H9. So Alt HK turns it into accounting, and then Alt H9 gets rid of decimals. And then what we do now is we're gonna say, you know what? I don't like this as a negative number, so we're gonna put a minus in front of this, and that should change all of them. What? One sec. No. Hold on here. Times 0.10. Ha! There we go. Sorry about that. So we're gonna go ahead and zoom into our work paper now. So you're gonna do Alt W Q Tab 140. Perfect. Okay, so it's just gonna make it a little bigger, a little easier for you guys to see this while I kind of go through this and audit this. Okay, so now that we have our ML, so we added, again, just to kind of retrace, we added our client name, our document title, period end date, PBC. We labeled this PBC because this is a document provided by our client. We added our ML, our PM, and our 5% of ML, which again, this should be all driven by your firm's audit methodology. This materiality should be determined during planning to determine what accounts you're gonna be testing and what is material and what is not. Again, materiality, what's important, what's not. Really simple. Okay, so next thing we're gonna do, we're gonna check that the TB nets to 0. I can't tell you how many times in my career I've received the TB and it doesn't net to 0. If your TB doesn't net to 0, literally that's the first thing you should do when you're checking your TB, just to make sure. When I mean net to 0, I mean that your debits, if you take your total debits, your total credits should also equal your total credits. That's what I mean by, and why net to 0, that means your total debits are 10.6 million and your credits aren't 10.6 million. So our TB nets to 0, we're good to go. That's our first starting point. Again, we always want to make sure that our TB nets to 0. The next thing we're going to do is we're going to add a purpose to the work paper. Essentially, what are we trying to do with this document, with this work paper? We need to let someone know, hey, this work paper, what is the purpose of preparing this work paper? So we're gonna add, and again, I like making my work papers as aesthetic as possible. So control space bar, control shift plus to add a column in between where I wanted to. So we're gonna add a purpose to this, purpose. So the purpose of this work paper is to, let's say, to test the mathematical accuracy of the trial balance, and to determine the accounts that will be tested as part of the 12/31/2024 audit. Perfect. That's our purpose of this work paper. Doesn't have to be any more complicated than that. We just want to make sure that whoever's going to review our audit work, whether it's regulators, someone in our own audit team, we want to make sure that, hey, the whole purpose of this is to test the mathematical accuracy of the trial balance and to determine the accounts that will be tested as part of the 12/31/2024 audit. Beautiful. All right, we're on our way. So the next thing we want to do is we want to add the procedures to it. So procedures from an audit perspective, since we haven't really done anything yet, or we really haven't done any audit work, usually I kind of like to leave this blank for now, just because I want to make sure I properly document what I'm going to be doing while I'm going through each process. So at the end, we'll kind of go back, and this is really good for you to practice your own documentation skills, because a lot of the times too, usually your purpose, procedures, and conclusion, hopefully it comes from a template that's already kind of pre-filled out, because usually your procedures, there's things that are going to be already kind of standardized in your firm, or certain procedures that are going to be required for you to perform. So you just want to make sure that you follow along with that. So for now, we're going to add that our procedures we're just going to leave them blank for now. Again, we'll go back and we'll write through, hey, every step that we did, we're going to have to come back and write our procedures. Lastly, we'll write our conclusion on here, conclusion, and we'll add a kind of a box around here. Let's do, again, I just hold shift, down arrow, right arrow, and then I'm going to do Alt H B S to add a border essentially around all of this, just to make it, again, look a lot more like an audit work paper. So again, we're going to add a yellow highlight in here just to let us know too, hey, this isn't done yet. We're going to need to come back and fill this out. So again, procedures, conclusion, we're going to make sure that we can come back and do this when we go through. The reason I like doing this too, just from an audit work paper perspective, I want to make sure that every single procedure I did, I properly documented it, and kind of going back and ensuring that, hey, I did this. Again, this is for this example. Sometimes, a lot of the times, it's going to be standardized, and there's going to be certain procedures that are already going to be done for you or written out for you, but it's good for you to start practicing. How I learned how to document really well in audit work papers is that I would kind of go back and rewrite everything I did. Like, hey, I received the trial balance from the client. I did this, next step. And I really just kind of rewrote everything I did. And that's how I got really good at documenting the procedure. So and the conclusion, obviously we don't know what the conclusion is yet because we haven't gone through any of the work that we need to do. So now that we're here, let's go ahead but as you guys can see, okay. So when you're auditing a trial balance, there's really a few key things in here. You want to make sure you have an account number, an account description, and obviously a debit and a credit. There's really 4 key critical things you need in a trial balance. Again, account number, account description, debit, and credit. Usually most audit softwares nowadays, they require you to pretty much have those 4 things kind of laid out nicely in Excel. So the audit software, the AI software, whatever you're using can quickly identify, okay, this is an account number. Okay, this is a description. Okay, this is a debit, this is a credit. When you're importing your trial balance and whatever audit software you're using, just in your, again, it depends what firm you're at or where you're working at, but most firms will have their predetermined audit software. But although AI tools nowadays are really, really good, you still need to tell the AI tool what exactly you're feeding it as far as information goes. So since you guys can see here, let's go ahead again, shift space bar, control minus, I'm holding control this whole time, control minus. So I want to kind of I want to separate this. So I'm going to add a little space in here. Okay. And I want to separate the account number from the account description. And how I'm going to do that is I'm simply going to do this. I'm going to do Alt, Data, A, and I'm going to text to columns. Again, this isn't really an Excel for accountants video. I'll make that in a whole separate video, but since I'm already kind of doing this and helping you audit a trial balance, I want to show you these quick Excel tools that every accountant needs because of how often you're going to be using this. So now that we have this, we're going to do a text to column. So E, and we're going to do, again, I can go through this later in a separate video on how exactly what each thing means. But for now, we're going to go quickly through it. We're going to, let's go back. Delimited. All right. We're going to do fixed width. Sorry. We're going to go scroll down here. And if you see here, all of the account numbers end in 4. So it's really, this one's a little simple to do because again, all the account numbers end in 4. So I'm going to check it real quick just for a sanity check, just to make sure I'm not screwing anything up in the trial balance. And we're going to split this up. So let's get next, finish. All the cells merged. Let's unmerge this cell. Let's do that all over again. So Alt, Data, A, E, text to columns, beautiful. Okay, next. Oh, nope. Fixed width. Let's do scroll down here. Scroll down, we're gonna go here. And as you can see, I'm pretty much telling Excel to split this data here. So hopefully you guys can see that. I'm gonna split all of this here. Next, finish. Usually there's already data in here. I mean, I already know. Okay, let's see. Usually I hit okay when it, well, okay, this is telling you that there's data in the, there's already data in the cells you want to extract. Let's see, you can always hit Control Z, which is gonna reverse whatever we did. So let's hit okay, let's see what it does. Ah, beautiful, look at that. I mean, yeah, did it screw up one thing we had already? Yeah, but not a big deal. Again, you can always fix this, no big deal. Let's go ahead and Control X. Let's add this to the front of this. To test, beautiful, and then let's add that again. Let's redo this, 1 sec. And we don't need all these columns now because Control minus. And let's go ahead and add another box around this. Beautiful. All right. So now we have, oh, look, and you see, it kind of screwed this up a little bit, but again, no big deal. You can always rewrite this account, description, depreciation expense. That's funny. Okay, description, account, we're going to write account number, account description. Beautiful. Okay. So now let me zoom out a little bit, just so you can see that. All right, now we're looking good. Now this is looking like an audit work paper. Oh, let's hit Control X. Now we're looking much better. Now you can see. And then usually too, I like to check if there's any like, if there's any extra information in the account numbers, because sometimes if you add, like if there's certain spaces and you don't see them, Excel sometimes won't recognize it or won't see it that way. So just make sure that, you know, all for the most part, we're good to go. Now we have a beautiful, again, with the trial balance, account number, account description, a debit, a credit, and finally we know that each one of them, and then our debits equal credits. So I think for an audit work paper perspective, so far, we're good to go. We are now in step 2 in our audit process. We are going to look into account numbers and account descriptions. We're going to verify that account numbers are in sequence, account descriptions are accurate and provide enough detail for each account, account balances appear accurate based on the normal balance of each account. So now that we're in step 2 in our audit process, we're gonna go through and review each account number in order. So here's how we're gonna do that. So typically when you look at a trial balance, you wanna make sure that your account numbers are in sequence. Usually a trial balance should flow in the order of liquidity or a trial balance. So it's always gonna go assets, liabilities, equity, revenue, expenses. Always, always, always. And you always wanna make sure that your assets are assets, liabilities, equity, revenue, expenses, always. And you always want to make sure that your account numbers flow in that way, or else believe me when I tell you, when you start trying to when you start trying to do financial statements, when you start trying to do other things, it's going to get so out of whack. So you want to make sure that your account numbers flow and make sense with the account description. So for example, our assets are starting here. So now we have cash. Account number 1000 is going to be cash. Usually for whatever reason, I don't know. I've audited so many companies in my career. I've looked at so many books. I've looked at so many trial balances. I don't know why. Cash is always obviously the most liquid asset. But that being said, usually account number 1000, a lot of companies use that for cash. So we have here cash is 1000, and when you're looking through this trial balance, I want you to really think like, hey, does this make sense? And you'll start seeing patterns. Usually, hopefully, your client or you're working on a bookkeeping client or whatever you're doing, you want to make sure your account numbers again flow with your assets, liabilities, equity, revenue, expenses, always. So we start off here. So we're looking at, if I were looking at this trial balance, I was auditing this company, I would say, okay, cash. It looks like they used their 1000, 1001 for their cash business account and their savings. Okay, now we have account 1100, 1100. Okay, that's their AR. We have 1101, other accounts receivable. Okay, their allowance for doubtful accounts. Okay, so they have like a reserve now under ASC 326. It's allowance for credit losses, but allowance for doubtful accounts. So that's the reserve against their AR. Beautiful. Okay, not too bad. Okay, that's looking good. Again, we're just looking at account numbers and account descriptions right now. That's all we're doing. So now we see 1200 inventory. That seems right so far. No big deal. 1201 inventory reserve. 1300 is for their prepaid expenses. Okay, I guess that's fine. Yeah, 1301 security deposit, 1302 other current assets, 1500 looks like they have their property, plant, and equipment. 1501 accumulated depreciation. Okay, so far asset. Okay, now we have accounts payable. So now that we have this, I would start looking at this and I would see, okay, well now it looks like I would go through again and through their assets and see, okay, it looks like all their 1100s are for their AR, 1200 is for inventory, 1300 is for prepaid expenses and other current assets, and the 1500s are for their PP&E, their property, plant, and equipment, and accumulated depreciation. Beautiful, great. So far, so good. I'm gonna lock this too. So I'm gonna freeze panes this. So all WFF. So I'm gonna freeze that just so I can scroll up and down and I can see that I'm looking at the account number, account description. So now that the assets look fine so far. So now that AP started, I wanna kind of go back and make sure, okay, I went through and I made sure all my assets are in order. Of liquidity, and now I make sure that my liabilities are also in order of liquidity. So accounts payable 2000, okay, accrued expenses 2100. Okay, so it looks like their AP accounts are in the 2000s, accrued 2100 and the accrued expenses. We have a short-term note payable, okay, 2200, and then a long-term note payable. Okay, wow, it looks like they're sophisticated enough to split up their short-term and long-term note payable. So their long-term note payable 2210, okay, and then boom, now common stock, that's an equity account. So now again, we split this up. Let me just split this up for you guys just for example's sake. So we have our assets here so far, great, in order, and now we have our accounts payable also in order, 2000. Beautiful. Okay, now that we went through all our liabilities, now we should start looking at our equity accounts. So they have common stock and retained earnings. Okay, so 3000 are for common stock, 3200 is for the retained earning accounts. Boom, now we have revenue accounts starting in the 4000. So let's split this up again. We're gonna delete these rows I added, but I'm just adding this just to kind of illustrate how you should be analyzing every trial balance you get. Assets, liabilities, equity, and now you have your revenue accounts. Okay, so revenue, they only have one revenue account. Okay, again, this is our company CPA Swag LLC, and we literally sell CPA t-shirts and yeah, coming soon. Just kidding. Okay, anyways, okay, maybe not really, I don't know. Anyway, we have revenue in the 4000, right? So we have revenue in the 4000. Okay, now we have cost of goods sold. So no other revenue accounts. So all their revenue accounts looks like they're in the 4000. Cost of goods sold 5000. Okay, then you have SG&A. So we'll call these expenses above the line. So the revenue less expenses, gross profit. Okay, now we have our SG&A salaries are 6000, rent 6010. Utilities 60/20, depreciation expense 60/30, and then we have our other and interest expense and other starting in the 7,000, and that's our complete trial balance. So far so good. I don't see any major issues with this so far. I'm gonna just go ahead and delete these rows that I made just because yeah, trial balance shouldn't have any spaces. And so far so good. We looked at the account number and the account description, and so far I think the order that it's in, the account numbers and the account description, it looks like everything's labeled properly. We are now in step 3 of the audit process. We are going to identify the normal balance of each account, and we're going to determine if it's reasonable. Every account has a normal balance, either a debit or a credit. Assets and expenses have normal debit balances. Liabilities, equity, and revenue have normal credit balances. We are going to compare the trial balance figures to the expected balances of each account. Any discrepancies that we know could indicate errors or misclassifications. Now we're in step 3, and now that we reviewed the account number and the account description and we made sure that it's reasonable, now we're gonna look at the actual account balances to make sure that, again, assets and expenses have normal debit balances. Liabilities, equity, and revenue have normal credit balances. So anything that's the opposite of that should be looked into because it could indicate errors on the client side or an error in one of your client's trial balances, something that isn't right. So now again, we know that we split this up again. Let's split it up again. Now we know that assets, it's perfectly set up. Assets, liabilities, equity, revenue, and expenses. So now that we have that, we know all our assets are here, right? They start in the 1000 and 1500. All of these are normal balances. Oh, why do we have a credit balance? Because it's a contra asset account. Perfect. So allowance for doubtful accounts, it reduces our AR. It's a contra asset account. So that does have a credit balance, but all of these accounts have a normal debit balance. Perfect. Inventory, okay, we have another credit balance, but again, this is a inventory reserve, goes against our gross inventory. So again, this is also fine. It's a contra asset. Now we have prepaid expenses, security deposit, other current assets, PP&E. Again, we have another credit in assets, but it's a contra asset because it goes against our gross value of our property, plant, and equipment. So assets seem to be fine. The balances don't seem to be unreasonable to me. Now we go look at our AP accounts. Accounts payable liabilities have a normal credit balance. So since they have a normal credit balance, this means that 700,000, 150, 200,000, all credit balances, beautiful, all in liabilities. Now, we split, this is also liability, split this up. So now that all our liabilities have a credit balance, beautiful. Now we look at our equity accounts. Equity accounts also have a normal credit balance, so we would expect the balance to be a credit. Equity, yep, credit, no problem. Revenue, again, just because it's the other things doesn't mean it's wrong. It would lead you to look into that account a little bit more to identify if there's any misclassifications or not. Revenue, again, again, what do we say? Normal credit balances, liability, equity, and revenue. So had a normal credit balance, beautiful. Now all of our expense accounts have a normal debit balance. It looks like to me that so far our balances don't seem out of whack. Our contra asset accounts seem to be properly labeled. Our account numbers seem to be fine. Now let's go into step 4. Step 4 in the audit process is to analyze each type of account. If the account is one of the following: asset, liability, equity, revenue, or expense. All right, we're now in step 4 of the audit process. So now we're gonna label each type of account. Again, we're gonna identify if it's an asset, a liability, equity, revenue, or expense. And these are all assets. So asset, perfect. Okay. Technically, like for these here, you would label these a contra asset, but I mean, depending on how your system's gonna work. But again, I don't think there's anything wrong with calling it contra asset. But all right, let's say, for example's sake here, it's a contra asset. All right, let's call this contra asset. We're good there. Okay, let's call this another contra asset. And that last one is a contra asset in here. Okay, beautiful. So again, when we analyzed the account number, account description, and the normal balances, we noted that these were liabilities. So you know what? Let me go ahead let me lock this again. Okay, so now these are all liabilities. So liability. These are again liability all till right here. So we're gonna control V. Okay, those are all liabilities, beautiful. And then now we have our equity accounts, or equity. So equity here, beautiful. And revenue is a revenue account, or beautiful. And then we're gonna call this all of these expense. Beautiful. Again, the classification might be a little different, but again, I think it's fine. We're just gonna call these expense accounts. But obviously you guys know now, this is the cost of goods sold account. This is a more of a SG&A, salaries, rent, and then obviously we have our depreciation and interest expense. But now we identified each type of account, and we know that each account is properly labeled and the normal balance of each account is right. And now let's go into the next step. We are now in step 5, where we're gonna map accounts to the financial statements. Each general ledger account in the trial balance belongs to a specific financial statement line item, either the income statement or the balance sheet. Ensure that each account is correctly categorized. Misclassifications can lead to inaccurate financial statements. All right, we're now in step 5. We're gonna map each one to either a balance sheet, income statement, and we're gonna add a financial statement line item to each account. So as we know here, these are all assets, liabilities, and equity. Those all go on the balance sheet. So these are all balance sheet. So we're gonna add balance sheet in here, balance sheet, and we're gonna control C, control down arrow, and we're gonna add a balance sheet to all of these accounts in here. Control V, boom. These are all balance sheet, beautiful. And this is gonna be our income statement. So income statement, we're gonna add a little bit. We're gonna make sure that our work paper is nice and aesthetic. So we're gonna do Alt H O I, and we're gonna center all of these in here. We're gonna do Alt H A C, and we're gonna add income statement to the rest of these accounts. Because again, as we already know, we already went through our previous steps. We know these are all income statement accounts. Beautiful. So now we map each one right. Now we have the classification right, whether it's balance sheet or income statement. We now need to add a financial statement line item. Again, the trial balance is the basis, it's the foundation for creating financial statements, but we need to label it to a correct financial statement line item. So this would be cash. And you know what? Let me make this a little smaller for our example's sake right now. So again, in here, we're going to say that this is the cash financial statement line item. So let's make this a little smaller here just so you guys can see. So this is cash. This would also be cash. So we have in here, we have our AR. So we're going to call this AR. We're going to also consider other accounts receivable. And again, maybe I'll make this a little bigger just for you guys can see that. So if we go here, and the way I'm doing that, I'm doing shift space bar. So again, shift space bar, it highlights the whole row. I always think the way I always teach this is shift space bar, think rows are kind of long and skinny. So it highlights the whole row. So shift space bar, long and skinny. You won't forget it. Trust me, I never forgot it. So shift space bar, highlight the whole row. This is also considered AR. Again, this is all going to fall within the accounts receivable line item in our financial statement. So obviously, again, as we said, it's a contra asset. It's going to go against our gross balance. Now we have our inventory accounts in here, all in here. So inventory and inventory reserve, beautiful. That's going to go in here. Okay. Then we have our prepaid, security deposit, other current assets. Let's call this prepaid and other CA, other current assets. So we're going to call, that's going to be one line item in the financial statements. So we're going to add that in there. All right, let's go back here. All right, what else do we have? We have PP&E. So we're going to say PP&E, but we also, remember, we also have a contra account with that too. So let's make sure that that's right. So PP&E, so we're going to label that in here. That's also going to be PP&E. All right, what other line items do we have? Okay, we have accounts payable. Beautiful. Another accounts payable. Accounts payable. Now we're going to add another line for accrued expenses. Okay, boom, boom. This is going to be ST note payable. Again, because your balance sheet has to be split up between long-term and short-term liabilities. So short-term note payable, long-term note payable. And again, this is going to be critical when you start preparing financial statements. You want to make sure that you properly label, especially for those of you that are going to be auditors or whether you're doing bookkeeping. You want to make sure that you want to make sure you properly label each account, because that's how it's going to flow into your financial statements when you're all said and done. Remember, the trial balance is the basis for the financial statement. You can't have a financial statement without a properly labeled trial balance. So we continue to go on here. We'll call this equity accounts. So equity. So, I mean, technically, these will probably be line items within themselves, common stock and retained earnings on our balance sheet. So we're going to say common stock, retained earnings. We have revenue. Okay. And we're going to say cost of goods sold, COGS here. And then we're going to call these all SG&A. So these are all going to be SG&A. Salaries, rent, utilities. We'll probably just label all those within one line item within. So essentially, all of these expenses will flow into one line item. So if we see SG&A on our financials, we'll see that's going to be $1,015,000. So we'll do that there. Okay. And then depreciation, we'll label that a separate line item. We want to make sure we capture that separately. So we're going to say depreciation expense. And then lastly, we'll say interest expense. Perfect. So now we map each one correctly, whether it's balance sheet or income statement. We let our audit software know we're just labeling each one correctly, or we're making sure that when we are preparing our financial statement, these are properly labeled. Again, super important you make sure you do this and you understand how your trial balance is going to end up flowing to your end product, which is going to be the financial statement. Whether you're doing auditing, bookkeeping, whatever you're doing, you want to make sure that you properly do this, because the end product that you're going to give to your client is going to be contingent upon this. You want to make sure that's done right. So now that we have our mapping done right, balance sheet, and then our financial statement line item that each account is going to go to, now we're going to go to our next step. Finally, in step 6, we're going to determine the need to test certain accounts for an audit. To determine if you need to test the account balance, consider these factors. Materiality. Is the account balance significant enough to materially impact the financial statements? Risk. Are there risk of error or fraud associated with this account? Complexity. Does the account require complex calculations or adjustments? For example, liability accounts like accounts payable and accrued expenses are usually tested because the risk of these accounts is understatement, meaning something was purposely not recorded to be reflected in the financial statements. We are now in step 6, and we're going to determine if we actually need to test each account balance and not necessarily what procedures we're going to do. That's a whole separate video, but we're just going to determine, hey, is the account materially enough? Is it quantitatively or qualitatively material enough to include in our audit procedures? Or is it important enough, in simple terms, is it important enough to the users of the financial statements in order for us to perform audit procedures over these account balances? So now we're doing testing performed. So cash, if we look at it, and you got to remember, you got to look at this more at the financial statement line item level rather than just individual accounts. Because sometimes you can have a bunch of accounts. You can have, I don't know, 10 different account cash balances. But if, I don't know, 2 of those make up almost the whole quantitative balance, then typically, I'm not saying you don't need to test the rest of the accounts. There's a lot of other factors that go into it, qualitative factors, but you need to look at it at not only necessarily at the singular account level, but at the financial statement line item level. And we know that these 2 accounts in here are going to flow into our cash line item on our financials. So if we look at those 2, and again, what's our materiality? If we look up here, we determine that to be $650,000. The total of our cash is $800,000. Yes, we need to perform testing on it. We're going to put a check mark. We're going to do all HFF, and we're going to do wingdings. Oh, wingdings 2, boom. And then we're gonna do capital P. That's just a check mark. Again, this is an Excel class, but I like adding check marks. It just looks cooler and more aesthetic. But okay, so now we're gonna go back to this, and cash is, we determined that is 800,000. We are gonna perform testing over that. So yes, we're gonna put a check. All right, AR again. AR is 830,000. All of these accounts. But again, do we need to test every single account? No, not really. Because again, yes, on the total line item basis, it is going to be 830,000, but this account's only 50,000. And of the 830, we're subjecting to testing 780,000. So anything that's left over, 50K, it's not material. Do we need to look into it? Probably not. So I'm going to say no. So I'm going to say no, we don't need to look into that account. We don't need to test $50,000 of receivables when our materiality is $650,000, and we're already subjecting to testing the $800,000. So we're going to determine that, yes, we will perform testing, and we're just going to grade this out for now. We're going to grade it out, okay? Okay, so then our inventory accounts, inventory 1.8 million. I'm going to say, what do you guys think? Yes, we're going to perform testing over that. Inventory reserve, this is such a great topic because it's 100,000. And before I give you the answer, what do you think? Should we test this? Remember, again, what I tell you guys about, sometimes we subject, accounts payable or accrued expenses to testing, although they're not quantitatively significant, because the risk of those accounts is understatement. And I would say, in my personal experience, an inventory reserve, the risk is also understatement, because how do you record an inventory reserve? Debit cost of sales, credit inventory reserve. So sometimes companies don't necessarily want to reserve for old inventory or inventory that they're not using anymore, because it's going to affect their bottom line, because they need to record a debit to expense. So I'm going to say 100%, this is CPA swag. I know everyone wants to buy my t-shirts and everyone wants to be cool and be rocking our stuff, but there could be a lot of inventory on hand that's just not going to be sold. So we need to reevaluate that. We need to make sure, we need to test the completeness of that inventory reserve. And again, that's more of an audit assertion thing. I'll go over that a whole separate video, but I would say yes, we need to test that inventory reserve because it could be understated. Okay, now we have prepaid expenses and other current assets. What do you guys think? I mean, total amount on the financial statement line item is 115,000. If we see here our sum. With the materiality of 650K, I'm gonna say, yeah, no thanks. We're gonna pass on that, dude. Yeah, we're not gonna do anything over that. So I'm gonna pass. So again, I'm not doing anything wrong. It's not material to the based on the materiality we determine. Again, this is going to be contingent upon the client, other factors, what your driving force is behind how you calculate a materiality. So many different things. But in our example's sake, we are not going to include these accounts in our testing. So now we have this. So PP&E. So PP&E is total balance is 1.8 million. I'm going to say, yeah, dude, we got to do something over that. So we're just going to control V this. So yep, we're going to perform testing over that. Accounts payable. Oh, 700,000. Oh, it actually is above. Okay, 700,000. Okay. Accrued expenses. This is where like I think audit becomes a little bit fun because you can get creative with this stuff. Again, this is sometimes like very, oh man, it really just depends on the audit, the client, what the risk is. But I would say, okay, accrued expenses, 150,000 for sure. We're testing AP, right? Because it's already quantitatively above materiality. So we have to do something over it. We have to subject it to audit procedures. But like this accrued expense account, I don't know, man. This is interesting. I would say, okay, so I would probably say yes, but I would caveat it with like during, I don't know, a planning meeting, you would determine and say like, hey man, you know what? Maybe we do some very light procedures over this, you know, or maybe we subject it to like a low level analytic or something along those lines. But I'm going to say yes. Let's perform some procedures over it. Again, the risk is usually understatement. You can probably get away with accrued expenses testing it very light, especially again, it's not material, but it can be quantitatively something you want to look into, or maybe there's like, I would just look at the accrueds. If I were auditing this company, if I were looking into it, I'd be like, all right, well, what are the accrueds last year? Like, why is it 150? If let's say, for example, your accrued expenses were, I don't know, last December, they were 600,000 and now they're 150, I'd be like, okay, why? Like I would look at their accrued, I would look at the detail behind this 150,000, what makes up that account balance year over year. Like I would get the detail in last year and I would get the detail this year. And I would literally line them up line by line and say, okay, well like, dude, why are your accrued expenses so, why did they decrease so much year over year? And in my personal experience, if your accrued, I'm not saying this is, obviously it's contingent upon a lot of things, timing, when they make payments, but if you had an accrued last year and you don't have a year this year, it's not, I would say, I would bet myself that you probably missed an accrual and you didn't record it. Again, I'm not saying you did it purposely, but you probably missed recording an accrual, or you paid for it earlier, or the service wasn't performed on time, whatever the case may be. But the fact is, it's not done yet. It's not recorded yet. So now we're looking at the short-term note payable. I would say on here 200,000. But again, you're gonna get comfortable with the long-term and short-term note payable. You're gonna test debt together. So I would say yes, you're gonna test both of these accounts. And then again, yes, it's on a different financial statement line item because you need to separate short-term and long-term. But you're gonna need to send a confirmation or get comfortable with that debt balance at the end of the year, and they're most likely they're gonna confirm the total balance, because again, short-term, long-term is really more of an accounting thing as far as, hey, this is the payments I'm gonna need to make within the next 12 months, so I need to classify that as short-term. So I'm gonna put both of these as yes. We need to test both of them. Common stock retained earnings, again, I'm gonna put yes on both. Common stock, you could probably look at the balance last year. I'm assuming maybe there was no change. And then obviously retained earnings should literally just be the earnings from this period closing into the period. So hopefully that's the only change in equity. It should be pretty straightforward. Revenue, what do you guys think? Yes, of course. 6.5 million on a $650,000 materiality. Yep, we're gonna need to perform testing over that. Cost of goods sold, same thing. Quantitatively, we have to do something over it. It's 3.5 million compared to 650,000. Salaries expense, again, quantitatively material. We needed to perform testing over that. Rent, utilities, depreciation. I mean, I don't know, man. What do you guys think? I would say like rent and utilities, probably not. I'm going to pass on that. I'm going to say, no, we don't need to perform testing over that. It's not quantitatively material. And again, if our accruals and our AP is fine, I think our rent and utility should be okay. Again, from a rent perspective, maybe rent expense, 120,000. They're probably missing like, not to get too technical, but like from an ASC 842 perspective, they're probably missing like a right of use asset and lease liability. But I mean, I don't know. It depends on their rental arrangements and their lease agreements and all that stuff. That's a whole separate video. Okay. Depreciation expense, you'll probably test. I'm going to say yes on depreciation expense, just because again, from an audit perspective, we'll probably end up getting comfortable with it with like a high level and with the analytic when we do our testing over PP&E. So we'll want to make sure that their depreciation is it's reasonable. It makes sense. It's not materially off. And interest expense, again, interest expense should go hand in hand with their debt. And $20,000 of interest expense on how much is their loan? What's their loan? 1.1 million. Oh man, that's kind of high. Yeah, that's kind of high. I don't know. I would say yes too, because again, I think we're going to get comfortable with it through debt, and that we're going to test debt anyway. So I would say, yes, I think we should do something over it. Again, doesn't have to be that crazy, or our procedures don't have to be that wild, but we will need to determine something just to make sure that our interest expense isn't. But again, their debt is 1.2 million, 20,000. Okay, I mean, it's not okay. I mean, we'll see. Yes, I think we should do something over it. Let's do something over it. So we're going to determine, and we determined that we will be performing testing over that account. So now we're in the last step of our audit process. And now that we went through and kind of audited this entire trial balance, now we're going to add remember from step, I think 2 or 3, we added our purpose, and now we're going to go through and document our procedures. So what's the first thing we did? I'm just going to put BC, which is me, Bryan Carreto. BC obtained the trial balance directly from the client and placed it below. That's it. You know what? Let's be a little bit more descriptive. BC obtained the trial balance for CPA Swag LLC directly from the client and placed it below. What's the second thing we did? The second thing we did is BC analyzed the trial balance. We analyzed the trial balance. Utilizing Microsoft itself. You know what? I'm going to say BC footed the trial balance, because we made sure that the second thing we did, we footed it, which is we just summed it down to make sure that it netted to 0. This is just how you come up with your procedures. You really just document what exactly you did. So what's the next thing we did? BC analyzed the trial balance, right? We analyzed the trial balance utilizing Microsoft Excel, we can use spell check after, utilizing Microsoft Excel to check for any misclassifications, errors in the account numbers, account descriptions, and account balances. The next thing we did, we said BC determine the type of account, the mapping, and financial statement line item of each account balance in, let's say, column I through K. Beautiful. What's the next thing we did? Step 5. BC determined if each account in the trial balance will be subjected to testing in column. Please see column. That's it. That's all we did. What did we do? If someone, again, remember what we talked about earlier, someone should be able to reperform our work based on the procedures that we wrote down. And that's all we did. Perfect. So now our procedures are complete. Again, the whole purpose of the procedures is for someone to be able to reperform what you did based on the procedures that you documented. The next thing we're going to do, we're going to add tick marks to our work paper. Tick marks are essentially documentation you add in your work paper in order, again, for someone to be able to reperform what you did. So in here, I'm going to add a tick mark A to this. So we're going to add tick mark A. We're going to add an arrow in here. The way I did this is Alt-N-S-H for shape. I'm going to add a arrow in here. I'm going to hold down the shift bar just so it's a straight arrow. I'm going to make that here. We're going to make that a black arrow. Beautiful. This is tick mark A. And what do we do here? I'm going to add a tick mark legend in here. So tick mark legend. Beautiful. A. And what do we do here? So I'm going to add Alt-H-M-C, Alt-W. Again, I'll teach a whole Excel class later on this. Okay. Alt-H-B-S. To add a border to it. And all I'm going to say is, I'm going to say BC footed the trial balance to ensure that the trial balance nets to 0. BC also tested the mathematical accuracy of the trial balance and noted no issues. So on here, BC determined the type of account, mapping, financial statement line item, and if the account subjected to testing. That's it. That's all we did. Perfect. So now I'm going to zoom out a little bit so you can see the entire work paper. So now we have our purpose in here. Beautiful. Our procedures, our conclusion. We now have our tick marks labeled perfectly. BC footed the trial balance to ensure that the trial balance, that the trial balance, that's why we always make sure we review our own work. Trial balance nets to 0. BC also determined the mathematical accuracy of the trial balance and noted no issues. Beautiful. Now tick mark B. Look at this. And we say BC determined the type of account, mapping, financial statement line item, and if the GL account will be subjected to testing. Subjected to audit procedures. Let's say audit procedures. Beautiful. Again, see, even me that I've been doing this for so long, sometimes you got to read your own work and realize like, hey, does that sound right or does that sound okay? And now lastly, we are going to add a conclusion. We're going to add a conclusion to this and we're going to say, based on the procedures performed, BC noted that the trial balance appears mathematically accurate. Based on the procedures performed, BC noted that the trial balance appears mathematically accurate and determined each account that will be subjected to audit procedures. What was our purpose? To test the mathematical accuracy of the trial balance and determine the accounts that will be subjected as part of the 12/31/2024 audit. And that's what we did. Based on the procedures performed, we noted that the trial balance appears mathematically accurate and we determined each account that will be subjected to audit procedures. I'm going to add in column L. We're going to unhighlight that yellow. We're going to add a border to all this. Alt HBS to add a border to all of it. We're gonna remove, again, the goal is always to make your work papers as aesthetic as possible. So we're gonna remove some rows here. So how I did that, remember, long and skinny, shift spacebar, control minus. We're gonna add one more, control shift plus. And now we're gonna zoom out a little bit just so we can see the entire thing. And lastly, what we're gonna do, you're always gonna do this with all of your work papers, F7, that's spell check. So look, payable, we wrote that wrong. Tick mark, no, that's fine. I'm gonna ignore that. Hey, check from the top, yes. Determine, look at that, we spelled that wrong. Directly, BC for the trial balance, ensure that the trial balance is 0, no issues. Yeah, see, look at that. You guys are seeing this in real time, man. This happens all the time and people don't do it. Always make sure whether you're giving a client deliverable, you're finalizing a work paper, review your own work, reread it, especially spell check, please spell check. Change, were, utilizing, spelled that wrong. Microsoft, gosh, dang it. Misclassifications, errors, errors. Done. All right. And now let's just read through our purpose and procedures one more time just to make sure that there's nothing that's weird. To test the mathematical, what was the purpose of this work paper? To test the mathematical accuracy of the trial balance and to determine the accounts that will be tested as part of the 12/31/2024 audit. Beautiful. All right, first procedure, BC obtained the trial balance for CPA Swag, LLC, directly from the client, placed it below. Beautiful. BC footed the trial balance and ensured that the trial balance nets to 0. See, this is literally what you got to be doing all the time. You got to review your own work, whether you're giving something to a client or you're going to be just signing off on your own work papers. No issues were noted. Third step, BC analyzed the trial balance utilizing Microsoft Excel to check for any misclassifications or errors in the account numbers, account descriptions, and account balances. Beautiful. Fourth step, BC determined the type of account, the mapping, and financial statement line item of each account balance in column I through K. Beautiful. BC determined if each account in the trial balance will be subjected to testing. Please see column L for work performed. Please see column L. Beautiful. Based on the procedures performed, BC noted that the trial balance appears mathematically accurate and determined each account that will be subjected to audit procedures in column L. Beautiful. And our tick marks, let's go through and read those just to make sure. In here, why did we tick mark A? BC footed the trial balance to ensure that the trial balance nets to 0. BC also tested the mathematical accuracy of the trial balance and noted no issues. Beautiful. Yeah, that's what we did. And then tick mark B, if I were reviewing this, I would say, okay, what happened here? What did they do? Go back here. BC determined the type of account, mapping, financial statement line item, and if the GL account will be subjected to audit procedures. That's exactly what we did. So we're going to zoom out, Alt W. We're going to do Alt WQ, spacebar 100. Beautiful. And now we have successfully audited and analyzed a trial balance. Let's recap the steps for auditing and analyzing a trial balance. First step, prepare the audit work paper. Second, review the account numbers and descriptions. Third, identify the normal balance of each account and ensure that the trial balance nets to zero. Fourth, analyze each type of account. Fifth, map accounts to the appropriate financial statement line item. Lastly, determine if the account balance needs to be tested based on materiality, risk, and other factors. Following these steps will help you ensure that you properly analyze and prepare a trial balance to be audited. This will also help you ensure that the financial information flowing into the financial statements is accurate and reliable. That's it for today's video. Auditing and analyzing a trial balance might seem daunting at first, but with practice, it becomes second nature. If you found this video helpful, don't forget to like, subscribe, and make sure to hit the notification bell so you never miss out on any future accounting videos. Also, drop a comment below if you have any questions or topics you'd like me to cover next. Thanks for watching. I'll see you in the next video.